Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to talk about unique options strategies, such as ratio verticals and reverse iron butterflies. These strategies are very interesting and they really demonstrate the power of the analytical tools we offer at ORATS. Before we get started, Matt, do you want to share your screen and go over our Microsoft position from last week?
Absolutely. I'm going to throw another one into the complex trades. It's the 1x3x2. So it's a butterfly with an additional short vertical. So we'll be doing 3 different types, and then we'll pick the best one to go with. How's that sound?
Yeah, sounds really interesting.
All right. So here's the Microsoft trade that we did. As you may remember, we sold the 400 put, and we bought the 360 put. You can see that actually in our trade journal that works for our paper trading now. So that's here, and we are doing well, Tyler. I wish I would just trade the ones that we traded on the show. We'd all be rich because we're doing pretty good.
Yeah.
This one's up a fair amount. We'll think about exiting that at some point. But for now, I think we'll let it go a bit. Any questions on this short put spread? Yeah, just you could click on it and check it out. You could see things like we think that it's worth more in the forecast, but we think that it's worth about fair, a little bit less by a distribution edge. Again, our distribution edge takes an historical distribution and does an expected return calculation based on the terminal values. I know it's a mouthful, but that's how we get that number. Our forecasts are based on our forecast of volatility, and our smoothing is based on our lines that we draw through each month skew. And I can just show you that real quickly in Microsoft. It's kind of cool how it jumps down there, but you could also see this. There's an orange line that you could vaguely see, and then those circles is the long and the short that we have on right now. But that orange line makes up the smooth edge, and so that smooth edge is generally right around where the market is, and very important to use. I mean, I think we talked about it a few times on the show that our theoretical values for these, especially the wider markets, it's important to start using some of these values. SMV values 47, market's 43 at 48, 436. The market is 425 at 440. So the mid 436 versus, so it's a few cents different from the mid, which is important. All right. Anything else on that, Tyler?
No, it's happy to see we're continuing to do well with these trades.
Yeah, let's see if we could put one on now again. So, the approach we take is, we want to teach about certain trades and then put on the best one. So today, I'm going to be using mostly the options scanner, at least to start out. Let's see here. Oh, we got a double calendar we didn't think about too. I think we've talked about a double calendar before. So we'll go to the, what did we have? What were the ones that you mentioned, Tyler? Sorry, no.
So we got 3 on the docket today. So we have the ratio vertical, the 1x3x2, or the butterfly with short vertical, and then the last one is the reverse iron butterfly.
That's right. I forgot the ratio vertical. One of my favorites, but it's a little. We'll do that one first. How's that?
Mm-hmm.
So the ratio, I call it the ratio vertical. Other people call it a bear trap. So what it is, let's just take one of these and take a look at it. So a bear trap is, if you could see the screen here, maybe I could zoom in just a little bit there. So you do it for a credit, so you're going to make money if the stock or ETF goes up. And then there's a area here where you can make the most, but then it's close to where you could lose the most. So the construction of this is as follows. So the nearer the money put, we buy. So that's, buying this one. So that's that green circle. So we buy there, sell that one there, sell one there, and buy this. Some people will just not buy this, but I like to buy, as you know. I don't like to be short units. So, and here's how it looks in the trade, and we get a small credit. And so if it goes up, we're happy. If it comes down to our trap, we're happy. If it goes past the trap, we're not happy. So that's the first one. So remember,
it looks pretty similar to an iron condor. You're just having that leg kind of up a little bit, right?
That's true. But this is, it'd be an iron, kind of a broken leg iron condor, because usually iron condors have similar or more similar profit on the wings, but this is, you're right, shifted over, and it's like almost like an iron condor. And I should also mention that it's two on the you're doing two puts on the outside. Okay. So it's a little steeper here. You could tell maybe it's a little steeper here than this one right here. That's because of the two. All right, so remember that one, Tyler, because you're going to have to choose which one we're going to do today. All right, so that's the ratio vertical or bear trap. All right, so let's take a look now. We'll do the 1x3x2 call fly plus a vertical. So let's see. I like to do them a little bit lower. So I'm going to click on 2 weeks rather than 1 month. So 10 days to 18 days. I think that's a little tight. I'm going to give this like 7 to, I don't know, 25. And I'm just tabbing through, and then the deltas. So the middle one is going to be the more at the money. I just was a little bit lazy and just kind of, made it all like that. But let's look and see how it looks, and then we'll start to adjust the legs. So again, you are. Let's look at the payout picture. I think it's easier. So you're buying a call, selling 3 calls, so then it gets really steep, and then you're buying 1 call. So you have, again, your units are, or 2 calls, I should say. Your units are flat, but and you have a little blip there. So in a way, it's a lot like the bear trap, but it's a bull trap. And as a matter of fact, we could offset one with the other, but I think we should change it. So this is one where it's kind of opposite the bull trap, because you make going down and you have a blip here and then going up. I mean, we could also change this around a little bit. We could make this difference a little bit greater by. So right now the difference in the strikes is only 1 strike. So we could, 3 strikes and 1 strike. So we could increase that. So the strike width is right here. So it's leg 1 minus leg 2. So leg 1 minus leg 2. So it's a negative. So we could say we want the max. Let's just see if that works. Oops. Leg 1 and leg 2. Let's see if that works. Yeah, that looks, and then we could do the same thing here. So we're just widening out the package here. So you see how it widened out a little bit there.
Yeah, that looks a lot better, actually. Yeah.
Okay. All right. So remember that one.
Okay.
And then, actually, I'm going to save the scan now. So it just overwrites it. So it's that easy. And then we're going to look at the reverse iron fly. All right. So basically what this is doing is, a lot of people like to sell the iron fly, but this is buying the iron fly. So let's take a look at this. So you're paying a fair amount of money. So that's your deep loss here, 744. But you can make a lot if the stock moves. Now, I don't like this that it's not balanced enough. So I'd like to see some balance there. So let's look at this. So So when I say balance, you could look at either, that's 8 points wide, and this is that the right? Yeah, that's the right one. So that's 11 points wide. So that's why it's unbalanced. But I like to look at, so this is almost 20 deltas, and this is, I guess that's 20 deltas as well. But so this is slightly unbalanced. So there's a big delta there. So a big delta, negative delta, because the put width is wider than the call width. So we could set that, a couple of different ways. We could do the spread delta. That's probably the best way to do it, is just to make the delta. So let's look at this one. Well, the delta is -3. So what we could do it either in the scan here, or we could do it in the scanner, by saying, well, let's have the deltas, somewhere around, I don't know, 1.5 or something, 0.015 and 0.015. So it's got to be, somewhere around pretty flat. And now let's see how that looks. Yeah, so that's a little bit better, not great, but 1.4, yeah. So we could get right at 0, but so that's a little bit more balanced right there. So your kink is right. The bottom, the worst is slightly, up a little bit. So that delta is slightly negative, but something like that. All right, Tyler. Now, what we could do is I'm just picking SPY just for ease, but we could also, find stocks that are more appropriate for this type of strategy. So in this particular case, what do you want? You want a stock that's going to move a lot, right?
Right, exactly. So, I mean, there's indicators that we have for that, right? We have the forecast of volatility. We have the historical volatility. You can compare that to the implied volatility to see, the ratio of that. I mean, we even have scans for, these high IV stocks.
Right. So, so let's start setting that up.
Yeah.
So probably the price has to be pretty high, so, maybe $50 to 1,000. We want the volume to be pretty high since we're doing so many legs. So we probably want it over, let's just say 600. That's probably low, but we'll see. Like you said, we want the implied volatility. We could either do it, this way as a forecast. So the forecast, 20-day divided by the IV 20. We'll do the X earnings, 20-day. And that ratio, we'll just display it right now. So let's see, mostly that ratio. So that needs to be high for this one. So we want it over 1.1, but we don't want it too high. So it's kind of we get crazy stocks. So, we don't want like 40% overvalued. So so it's finding Tesla right now. And we've got 125 stocks. So we could still narrow this down a little bit. I think you said something about long-term volatility, or percentile might be kind of good.
Yeah, percentile, or looking at the ratio of the implied versus the historical to see if it's consistently over what it, implies to be.
Right. Yeah, because we want historical volatility to be there, right?
Yeah.
So so we'll say, I don't know, the 90-day HV, OR HV. $90-day to be greater than, I would say greater than that. Let's see let's display it just to see what it is. 1.27s. So we'll take that at greater than 1. Let's say 1.15, and not too great, 1.7. All right. So we're still finding Tesla and Apple.
All right.
What do you think? Any other? Do we want it to be? Yeah, it doesn't matter if it's around earnings, I don't think.
Yeah, I mean, I think it's a pretty, volatile play. Is there any sort of stock outlook that we want to look at, like fundamentals? We have some fundamentals in the stock scanner.
Nah, I don't want to, because I'd like to get ETFs too, and the ETFs don't have the fundamentals. So this is going to be for the reverse iron fly, right?
Yeah, this is the reverse iron butterfly.
Ratios, I think we could leave it there.
Do we have any slope risk? Should we look at the skew?
Yeah, there's no slope because it's equal on both sides.
Okay.
I mean derivative, but I wouldn't think there's be that many.
Okay.
It's just a lot here, so
we can choose which one to sort on, like which column we care about the most, and then it'll send the top 25 over to
I see. I did not know that. I just learned that. I probably should have known it. Do you like the forecast or the HV, Tyler?
Let's do the forecast. Yeah. And then we'll start to see that F% pop up in the
interesting. We got Coke. So let's see. All right, so let's save that. Now we go over to the option scanner and then take out SPY and then choose that for the reverse iron fly. This is the reverse iron fly. And so there's all of the there's Coke, it's just putting it in reverse order, but there's that's the top 25. Mm-hmm. So, yeah, and this is saying, hey, it's limited. That's fine. So now there's Coke. All right.
There it is.
Take a look at Coke. Okay, so it's only 1 point, and we're paying 70 cents. So we could only make 27 cents. So I don't know if I'm that keen on that. So let's make it so it can't do that. Okay, so it has to be at least more than 1 point wide. And so it goes, the first leg is 63, so 63 minus, so it's negative. So I have to do the negatives as the numbers here, and I'll show you what that means. Okay, so the differences, so the DTE diff, we want all the same. Strike width, they have it 0, 0. Oh yeah, strike width is 0 for the iron fly. I did put that in. But I think it needs to be negative, max of negative, we'll say 3 there, and minimum of, I think it's, yeah, negative 3 again. Oh no, that didn't work. So that should work. Yeah, so I had it wrong. So 3 and 3, so that's on the upper legs. All right, so the middle one's equal, and it has to be at least 3 different difference on the puts and the calls. So now we're good there. So now we have Merck for $1.85. Let's do our smooth. Look at how often that. So what that means is the smooth is way off because you got a 4-legged, and it's worth 230, and they're saying you should get it for, there's 25% edge in the smooth, which rarely could happen. And let's just look at that a little bit closer right here.
So the reason you'd want to filter those out, right, is because you're not going to get filled on that if you send it through at the mid.
Exactly. Yeah, you could see that there's one of these that are off. Yeah, I mean it's 77 cents at $1.44. That's crazy for Merck. So we should have probably had a market width in the stock scanner. So let's see if we could. Do we have that in here? I don't know if it's a major one or not.
I'm not sure if we have it in there. We have it in the options scanner table, so you can filter by it.
Yeah, so let's put market width. Let's do it as just display, and we should be able to see what Merck is. Where is Merck? There's Merck. So how wide is Merck? 0.19. So that's almost 2% wide. So that's already very wide. And I think we could probably, so we should set this at like maybe 1.5% or something like that.
So what exactly is that indicator that you're using there, Matt?
That's the average width. Yeah, the average width in percentage terms of the bid-ask spread.
Across all strikes,
it's a weighted average to the 30-day. And we also have a longer term one as well. So again, I'm going to, I'd like it to be most 0.01. Let's see what we got. So then we just get the tighter stocks, and they're 21 now.
Yeah, that narrowed it significantly.
Yeah, maybe I'll just make it a little bit bigger, because then we could get a little bit more stocks. Yeah, okay. Still, we got it way down. Maybe that's a little bit deep out. And remember, save it. And then we'll go back to option scanner.
I think you got to clear those out first.
I don't know.
Did it?
I think it's,
Oh, it might have updated it. Oh,
it does update.
Is still in there though.
What's that?
MRK is still in
there. Okay, so we'll clear this and then pull it up again. I think as it sits here, it does update.
Okay, yeah.
But be safe. So now we got D-Dog. And then let's look at D-Dog. Datadog. And they next earnings is in August, so this is before. This is 517. So we could look. We also might want to look at that reward to risk ratio too. Let's go look at that. I didn't set that, but let's take a look at the reward to risk and what we're getting from some of these stocks. So we need to set this smooth. So anyway, the smooth I like to set. We'll set it -2 to 2. That's going to cut out a lot.
Setting that market width percentage in the stock scanner essentially got rid of a lot of the very wide.
The huge ones. I'm pointing at it with my finger. That's wise to do. But anyway, we got rid of a lot of the crazy ones, right?
Yeah.
So on a payoff, I don't know. So 1 to 4. Let's just see. Like this is a 1 to 4 is a small one. So 1 to 5 now. So like we're risking, $2.50 for a $3. So only getting 50 cents. So like we could set that. We can set a minimum risk. So it's 1 divided by 3. So it's 0.3 or something like that, right, Tyler?
Right.
And then if I want to make it smaller, 1 divided by 2.5. Oh wait, I'm going the wrong way. I don't want a lot of. I want that bigger, right? So I want the minimum that comes to me to be 1 to 2, like 0.4. Is that going to? Yeah. So that clears a lot of these out. So now we have stuff like 350, and you could make 5. So it's the better, it's a better risk return. So that's essentially what we're looking for, is a bigger risk reward. So let's see if we get even bigger than that. Let's get 4.45. And then, so we only have 1 trade. So let's make it a little bit bigger. And we'll just leave it at 0.42. And we got 2 trades. So maybe just 0.4. So it's tough to get 0.4. So we have a few. We have 5 trades. So we've narrowed it down quite a bit. So we have a good smattering there. So let's take a look at these. So we still have D-Dog. We could make the put to put is 8, and this is 8. So $8. So by risking 569, and then how much does it have to move? Then you look at the probability of profit. 60%, 64%, pretty good. So this might be a good one for us. Let's look at it in the trade builder. I'm not that familiar with this stock. So let's narrow this down a little bit. So D-Dog's had a lot of insider selling. It's moving a fair amount. So here's, so we have to go outside of these bounds right here. So we want this one to move. So remember how that looked, Tyler, and then let's just, I know we're kind of cheating a little bit by looking, but I like to do it that way. Here's Expedia. Let's take a look at Expedia in the trade builder. So this one's gapped down on earnings. So this one moves a lot on earnings, probably not a lot on non-earnings. We have tables for that, right? So the
intra move, yeah.
Intra earnings and inter earnings. So how much does it move? 28 versus 22. That's pretty good. What's our it's not going to have earnings for a while. Let's look at our IV on this. I know we're kind of diving deep, but this is what you need to do. Our IVs are pretty low. Kind of like this one. I don't know. So maybe we'll change the rules, Tyler. Which trade do you want to do? And maybe we could just do one of these and then one of the other two. How does that sound? We'll have two trades on.
I do like the Expedia trade.
Yeah, I like this too.
Yeah, I think it looks
a little
good.
negative, but
we also have a positive distribution edge on that one.
Yeah,
which is good.
And a huge just forecast edge.
Yeah. Well, all of them had a good forecast edge, I think, because we scanned on the
you're right. Yeah.
volatility ratios there.
You're right. Okay, so let's 349. So let's give them a fair amount. So let's go up to 355. We could probably get filled. So this will be one of our trades. We'll force it. And all right, so let's send that off. All right. What else? What were the other ones that you liked, Heather? Between.
So yeah, we did the reverse iron butterfly, and then we have the ratio vertical or the 1x3x2.
Yeah, which one did you like?
So the difference was, or the 1x3x2 had more of a sharp. It had like a triangle, pretty much, unlike the
right. That's correct.
The bullish side. Yeah. So kind of higher gains, higher max gain. We can try looking at that one again.
All right. So you know what I could do is I could bring in ETFs sell vol. See if we want to do one of these. I don't know if that'll come up.
Yeah, it doesn't look like there's anything coming up for that.
Yeah.
Do you want to talk about real quick before we're almost out of time here? Went by quick. How to set up a custom option scan.
Oh yeah.
So how you're setting these up, because these aren't typical strategies. So we do have them available. We're going to make them available in the templates, but just so you know, you can set up any type of strategy in here, right?
Yeah, you're right. We already have a trade, so we do have to go through that again. So here's how I did the fly vertical. So I said, all right, so they're all calls and there are only 3 legs. So turn off the fourth, change that to a call, and it's 1x3x2. So then I said add custom, and then set the deltas that you want for each of your legs. So it's 1, 3, 2. So the one that you're buying is the highest delta, and it goes less delta, less delta. So it'd be something like the highest delta might be a 40 delta. This might be a 30, and this might be a 20.
Right.
And even though it's wide, the scanner will pick the ones closest to your target in that, and do some other weighting. So that's how you set that one up.
Mm-hmm.
The other one was the ratio vertical, which was you could do it as a call ratio vertical. So it's you buy 1, you sell 1, you sell 2, you buy 2. So we'll add that. And then the deltas on that this is the highest delta, 30. This is the next highest. This is pretty close. This is like 25. And then you're selling like a 15 and buying a 5. And then you just set these around what you're looking for here. So that's how you set that that one up.
Nice. And what's interesting is you can have all these 3 strategies in there at once, right? So
Right.
we can scan on the ratio vertical, on the reverse iron butterfly, all these things at the same time.
That's correct.
With all their different DTEs and deltas. And,
right. And then once you find them, then you could like, so this is the top one that we have by the ranking that we have. So I usually like to put that a little smooth and risk reward. And then, again, do the, 0.01 or say 1, -1, hello, -1 and 1. And so then that narrows it down. And then when you start to look at these, then you say, okay, is this the path picture I want? This actually looks good. This is a fair amount of risks. What is the risk is only 2-1. It's actually a pretty good looking trade.
I mean, it's on SPY. We can do it.
Let me just look at this distribution. Is that right? I'd take that. Is this a longer term? Yeah, it's a little bit longer term. This is kind of taking advantage of the calls are kind of high volatility versus there's no skew in that. All right, you want to do this one too?
Yeah, let's do that one.
Okay. We have it worth. So we're giving them 4 cents. That should be plenty. We'll force it. All right, Tyler.
See if we go 2 for 2. Oh.
All right. Cool. All right. So yeah, let's just kind of go back over. We covered a lot. So the first thing that we looked at was our Microsoft. We're doing well on that. And then we talked about how to set up in custom option spreads, and then we talked a little bit about what are the best types of stocks for these option spreads, and we went into the stock scanner, and we set those up, and then we came back and we chose our options, and we'll go check them out next week. And if we do anything intra week, we still have the trade journal so we could explain exactly what we did.
Awesome. Yeah, the option scanner is really neat. How you can scan all that at the same time. You can bring in your stocks to scan on up to 25 at a time, and then set up all those different unique strategies that make options trading really fun and interesting.
Yeah, definitely.
All right. Thank you, Matt. And thank you guys for watching. We will be back again next week at the same time, 2 p.m. Eastern. See you then.
Calling all options and futures traders. The markets may be wild, but you don't have to be. Join the Tradier Options Summit sponsored by SIBO on May 22nd. Let's tame the volatility with expert tips and strategies on navigating volatile markets in 2024. I will be hosting this full-day virtual online event. Learn from the best. Industry leaders will share their insights, trade ideas, and strategies on navigating these volatile times. Plus, get a sneak peek into Tradier Futures, which will be launching soon. Sign up now to be part of the action. Reserve your free spot by registering at the link below. If you're part of our email list, stay tuned for your invitation and link to register. Also, remember to visit hub.tradier.com. Join the Tradier Hub for free for all your market insights, trading ideas, market news, and daily live shows with industry experts covering all aspects of the financial world. See you on the 22nd at 10 a.m. Eastern Time.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.